Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Friday, November 21st. This will be a technical analysis breakdown, so if you are someone that uses charts within your trading, or maybe you're interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. First off, a couple clarifications. Number one, the candlestick that you see right here will be moving around and changing. That is because the market's still open for a small amount of time. But I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. Second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So ticker symbol number one, we were looking at NVDA, Nvidia, and what a wild day in the market. And I think Nvidia played a big role in this. And I promise, and if you don't believe me, I'm not offended. I get it. I could be a total stranger to you. But if you go back and watch the video that I did yesterday, I mapped out both of these levels. And I'm not patting myself on the back, but I am patting charts on the back. The power of technical analysis. And if you watch that video, hopefully remember me talking about that red line there of resistance at 195.50. And while it was close, not exactly, but I think close enough, price did gap up right around that general area and then got rejected. Now, in no way, shape, or form did I think that a rejection off that area would cause it to now potentially come all the way back down to now maybe the bottom part of the level that I talked about in yesterday's video right here around the $180 mark. Truly a crazy, in trader jargon, gap and trap. So now that doesn't mean the entire chart's destroyed, but as far as today is concerned, an absolute gap and trap. And as I zoom out, you can see that big picture-wise, the price is still plenty up, where it was, but in many ways, just stuck in between this downwards channel, which is why 180 is actually quite important, because if the price does start to break below 180 and goes even further, then yeah, you still have some lows here and there, but that does start to put the chart in territory that it has very little experience with over the past few months. But anyway, look at it. Nvidia, if you were to say, Clay, just summarize today for me, Nvidia, an absolute and nasty gap and trap. Next one here, SOXS, and this will mean a little bit more to those of you that watched previous videos, but if you did, hopefully remember me talking about that resistance line right there. And it gapped down today, curled upwards, came up here, got the break through that level, came back down a couple of times and did a back test both there, and then from that point, beautiful back test and go. So overall, big breakout today. I'll go ahead and get rid of that level and now map out some new levels. So the ideal area moving forward, when you say, Clay, what would make the chart the absolute strongest moving forward? And that would be if the price could say, sorry about that, there we go. That would be if the price could say up here above $4.50. Now, with that said, if the price falls below $4.50, that doesn't mean the entire chart's destroyed or ruined or anything like that. But if the price can stay above there, that would be a great sign of power. Looking at things from the bigger picture point of view, that's where the purple line there comes into play, the 50-period simple moving average. Keyword being moving, so as time goes by, that line is going to move itself higher and higher, and it's essentially like a trend line that's drawing itself for you. So in other words, as long as the price stays above that trend line, then the overall price and trend is still in the bullish direction. Again, preferably speaking, stay above 450, but from the grand scheme of it all, as long as the price stays above that purple line, then the overall trend is fully in the upwards direction. Next one, SOND, and this is an interesting situation where we have a pretty crazy move to start, big gap up, price came up there, nasty move back down, and this is, when the price gets right around this area, it becomes very valid to say, is this the beginning of the end? Is this a gap and trap? Is this a pump and dump? And then the price at least started to go sideways here. Now, let me be very clear. Just because the price goes sideways does not mean for sure guaranteed the pullback is over or anything like that. My point here is it's at least a little bit more valid. Case in point, let's say the price was still doing this, and then I'm saying, hey, it's looking like this could be the bottom. You'd be totally justified to say, wait a second, based on what? The price is literally still going straight down. Well, that's not the case here. It has at least started to go sideways. So again, does that guarantee this is the bottom? And that for sure guaranteed the price is going to curl back upwards? It doesn't. But does that make it at least a valid question I'll throw out there as a scenario? Absolutely. So if you like these sets of circumstances, you like penny stocks, definitely keep an eye on it. Next one, OPEN, and the downtrend continues. And really the easiest way to see the downtrend and to continue to monitor it is via this red line here that I put in several videos ago. So first I'm going to do is just extend this down, and we'll continue to watch it as time plays out. So watch that. If there are any sort of bounces, I would be very skeptical until the price can prove itself. Okay, Clay, define prove itself. Any sort of bounces needs to get up above that red line before I'm even going to think of any sort of genuine bullishness. Until then, I would just chalk everything up to a dead cat bounce. There's 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 a dead cat bounce. Again, I'm not saying that this thing can never actually have a true bounce, but again, it's just as long as the price is below that red line, then in my opinion, I am chalking it up to a dead cat bounce. In terms of areas of support, just going to drag this here down. And that is, let's see, next key level right there around $6.10. So I realized that green line was there and I adjusted it down. So in that angle, assuming you're bullish, whenever levels of support need to be adjusted downwards, not a good sign. And that is what happened here. But 610 now the newest area of support. But like I said, the most important dynamic, in my opinion, on this chart is that resistance line right there. So we'll see if the price can try to get above there or at least get sideways movement for a day or two. Next one here, ONDS. And once more, this will mean more to those of you that have watched past videos. But if you have, hopefully remember me talking about that 787 mark, the red line, because once again, this morning price gapped up, got slightly above it. But as I warned in past videos, the problem with this one has never been breaking above 787. It's been staying up above it. As you can see here, multiple instances of the price breaking above that level, not staying above it. And once more, we had that happen right there. Now, did I think that it was going to get that nasty? I definitely did not. And now the price is coming all the way down to potentially putting the sideways channel into the test on the flip side of things, the bottom part. Now, as of right now, the price is doing its best to stay above that pink line there, which is the famous important 200 period moving average, currently valued at 633. But in the event that level does not hold up, and there are no guarantees, but I don't think anybody would be shocked if there's a break of that pink line there, that the price eventually drifts down and at least retest the $6 mark. But yeah, crazy day today. Absolute nasty, nasty rejection off the top part of that channel. Real quick, want to take a break and help you solve a very common problem out there that maybe pertains to you, and that is a desire to be a day trader, have unlimited day trades every single day, but you can't because of the pattern day trade rule. Well, if that describes you, then there is another market out there, and there is a way to enter into this market with very little risk, where you have, like I said, a low amount of your money on the line, and then you have unlimited day trades. Now, I get it. This sounds too good to be true. What's sketchy? This is so sketchy, which I get it, which is why I say come swing by the live stream. I start every day at 11 a.m. Eastern and go for a few hours and see it with your very own eyes. It's what I've been doing with my own money, and you can see it play out right before your eyes and ask me any sort of questions that you may have. So definitely, please just be aware that you don't have to put up with that pattern day trading rule. There are other markets out there that are quite frankly better than the stock market anyways, but just something to consider. Next one here, AIIO, and overall the chart's doing fine, but this is tricky to talk about now from a perspective or from a presentation standpoint, because there's a lot of perspectives that go into it. If you're a day trader, flipper, scalper, and you bought somewhere up around there and your plan was to buy and sell within 3 minutes, well then from that angle, the chart looks really, really bad because there is clearly this big pullback. Now, if you care about the grand scheme of things, even if and I'm not saying the price is going to pull back even more, but for example, it's like, let's say the price pulls all the way back to that level right there at 72 cents. So price comes down here, does something like that, and then curls back up. Now, emphasis here on big picture. From the big picture standpoint, what would you have? Well, you'd have a set of lows there, lows there, lows there, lows down here. And if you envision each one of those as stair steps, what do you have? Well, now all of a sudden you have stair steps making progress in the upwards direction. So again, from that angle, progress is still being made. But I'm well aware of, I understand if you're a day trader and you bought up here, you definitely don't care about these stair steps. So that's where I'm trying to parse it out and explain the difference of a more of a broader standpoint versus somebody that's maybe more of a day trader. But yes, from the overarching standpoint, the price does still have the ability to build a higher base and can continue on with the uptrend. So we'll see what happens. Next one, MNDR. Nice pattern here. So let's get this pattern drawn into play first. So let's get the upper part of the pattern in play. Let's get the lower part right there. Change that to green for support. And then just to make sure everybody can see the pattern, let's keep it one color. So we have our area of resistance. We have our area of support. We have the big explosive move right here. And for you golfers, try to make a little bit more visual, put the golf hole down here. This would be a bull pennant pattern. Now, just because something is a bullish pattern does not mean for sure guaranteed if it comes up here and breaks through there that there's going to be a big breakout. But is it at least a valid question to throw out there as a possibility? Absolutely. So if you like this price range, if you like bull pennant patterns, then definitely keep an eye on MNDR. Next one here, EPSM, and I'm going to go through this one very quickly in the spirit of trying to respect your time because I literally just talked about this pattern. So everything I'm going to say here should sound very, very familiar, but let's just get it mapped out. Because I can't help myself, we got to go keep it the same color. So resistance, support, big move up, golf hole down here. We are looking at another bull pennant pattern. So same general price range, but if you like bull pennants and you like this price range, you now have a couple different choices. Next one here, AMD, and very similar to a lot of these stocks, had the gap up and was looking good for a moment and then absolutely got smacked back down. Now, did anybody know it was going to get that bad? I don't know about that, but nonetheless, though, if you were to summarize just today, gap and trap would be suitable. And now it's just a question of where are some potential, in fact, all right, I'm going to have to go to another time frame. Let's go to the daily time frame. There we go. So so now instead of each one of these representing 30 minutes, each one represents 1 day. But now from this reference point, next key area that is looking like could very well be coming into play right down here at 202.50. Why is 202.50 important? Well, during this big gap up here, that was the low of that big gap up. So if the price were to come down here and blast down through there, gaps do not have to close. Nothing has to happen in the market. That would imply there's a guarantee. But do gaps tend to close? Yeah, I mean, they do tend to close. So if the price comes down here and blasts down through that area, that does put it into a very, very big range of potential, kind of real estate that could create that much more downside bearish pressure. Again, not guaranteed to happen, but certainly something to keep an eye on. So yes, moving forward, that 202.50 mark, very, very critical area and very, very important one. And it's looking like it will indeed get tested on Friday. So let's see what happens with it. Next one, TSLA Tesla, and a lot of these. Now, Tesla was a little different, and I would argue more cruel. A lot of these, Nvidia and some of these other ones, AMD, there was a gap up, but there wasn't really a whole lot of sign of strength. It kind of just started to come back down right away. But poor Tesla spent the first 30 minutes acting like it was strong, and it was strong. Next 30 minutes, another green candle, and then after that is where the plug got pulled. So pretty brutal when you stop and think about it. But once again, this will mean more to those of you that have watched past videos. But we've been talking about these two lines time and time again. And as I speak right now, the price is now slightly below, but still well within the range of the bottom part of this channel right here at 396.50. So that is the big question mark I have moving forward, is what exactly is going to happen. But this channel is so tricky because it has now had two false breakouts. Here was false breakout number one. Here's false breakout number two. And the reason it becomes tricky to the downside is there's also already been a false breakdown. So even if it breaks down, I'm not saying it can't pick up more momentum, but even if it comes down around here, I mean, you got to be, whoops, I'm sorry. You didn't even see that because it was behind my ugly mug. There we go. There is that first false breakdown. So two false breakouts and then the one false breakdown right here. So like I said, if it comes down here, it could very well be a legitimate breakdown, but you got to be very careful from that regard too. So in other words, Tesla, from just kind of a trading standpoint, quite the tricky chart with all these fake breakouts back and forth relative to this channel here. So if you like these situations though, keep an eye on it. So that wraps up the top 10 list. Again, if you are sick and tired of the pattern day trading rule, maybe you just want a market that offers you more flexibility, that's open 23 hours a day, 6 days a week, then definitely check out what I've been doing. Come by the live stream, ask me any sort of questions, watch it with your very own eyes, because it does open up a whole lot of opportunity. And like I said, when it comes to the risk department, very little of your money is actually at risk. But like I said, this all sounds sketchy. So just come swing by, check it out, ask me any sort of question. So thanks for hanging out, and hopefully I'll see you on the live stream.